So where will Zoom be in 1 year from now? Honestly, I don't know. However, according to the monthly chart, we are at an accumulation area in the lows during the IPO back in May of 2019. So I dare to say that we will not be below $60 in a year's time. However, if price is going to rise, it has some work to do. Before we continue with the analysis, we're going to look at this article. It is coming from The Motley Fool. Where will Zoom be in 1 year? So Zoom had an incredible run during the pandemic. No one saw it coming. However, profits are down in the first half of its latest fiscal year. Sales gains have slowed, and the company continues to lose customers in its core online meeting business. Again, during the pandemic, Zoom was really the only player, but since then, other players have come into the market as working from home has become a viable business model, at least a portion of people's companies' business models. According to management's latest August update, Zoom is on track to generate roughly 4.5 billion of revenue this year, compared to 4.4 billion in fiscal 2023. Achieving this result would mark a second consecutive year of slowing growth as revenue rises by a lackluster 2% following last year's 7% increase. And that's the issue. It's revenue growth. Big question going forward is whether Zoom can speed its growth back up from here. Fortunately, it is finding success in the enterprise division where sales rose 10% in the most recent quarter. That boost was partly thanks to an expanding client list, especially among larger customers. Zoom has also convinced many existing customers to renew contracts at higher annual value, so that's important. But nevertheless, the growth is slowing, as when the pandemic arrived in its early months, everyone wanted to switch from in person to online. So it's hard to compare comparisons today relative to even a year ago or 2 years ago. The news is more clearly positive around Zoom's finances. While profit margins are down, the software specialist has maintained positive net earnings despite the sharp growth slowdown. Operating profit margins landed at 8% of sales in the first half of fiscal 2024 compared to its 14% a year earlier. Cash flow, a key metric for any software as a service business, is rebounding from last year's lows. Zoom is also sitting on roughly $6 billion in cash right now, which gives executives lots of flexibility as they target growth initiatives like acquisitions and integration of more AI into the platform. So looking ahead, that's what it's all about, at least on Wall Street. It's not about what you did for me yesterday, it's about what you're going to do for me today. Steadily boosting the value of that communication platform is the surest path toward positive returns for Zoom's business and its shareholders over the next year. These innovations, particularly if combined with a rebound in the IT spending environment, could allow the company to meaningfully outpace the sluggish growth that investors are expecting from it in fiscal 2024 and 2025. There's also the potential for a game-changing acquisition that boosts Zoom's addressable market. Yet the most likely scenario is that the company will continue to posting modestly higher revenue while improving key financial metrics like cash flow and earnings. Now, my personal opinion on Zoom, it's a dead stock. But I could be wrong. And again, we're at the bottoms. I don't see price going below 60. So if that's the case, it's only one way, and that's to the upside. Nevertheless, price has some headwinds in front of it. Let's drill down to the weekly chart. All these wicks are rejection wicks, which implies selling pressure. So, between current levels at $70 and say 90, price is going to have a hard time getting through unless a serious catalyst comes out the would work that benefits price. Until then, let's drill down to the daily chart. Price has been respecting this uptrend line on the daily chart since the lows that were achieved back in April. So as long as price can respect this uptrend line, price is going to slowly move higher. What you really want to see is price make another impulse move higher and a pullback to allow the moving averages to start turning up and then serving as dynamic support. Now again, they announced their earnings back in August. It was pretty muted. So potentially the next catalyst for price is going to be in November when they announce their next earnings. Nevertheless, personally, I would stay away from Zoom. However, hopefully this video helps you make a decision whether to stay on the sidelines as well. Thanks for watching. Subscribe. Please like the video.